tell yourself that you're done for the day. You've already taken three trades, two losses, maybe one small win, and your plan says to stop. So you close the chart, you stand up, you walk away, and then a few minutes later, you come back. Just to look, you tell yourself you're not going to trade. You only want to see what the market's doing, right? But then you see the price begin moving so quickly, a large candle forms, and your heart rises. Your hand moves towards the mouse, and before you fully understand what just happened, you're back in another trade. Like, there was no setup, there was no confirmation, and there's no real reason. It's just the feeling that something is about to happen and you can't afford to miss it. See, most traders call this a lack of discipline. But there might be something deeper happening here because trading does not only involve money, it involves anticipation, uncertainty, risk, reward. And one of the most powerful chemicals in the brain, dopamine. You see, you may not be addicted to making money, you may be addicted to the possibility of what the next trade could become. See, most people think that dopamine is a chemical of happiness. You know, you make money, your brain releases dopamine, you feel good. But dopamine is not only connected to receiving a reward, it's also deeply connected to the anticipation, the possibility of a reward. The feeling that something valuable might be about to happen. And that distinction matters because trading is filled with anticipation, right? You know, before the entry, you imagine a move. After the entry, you watch every single candle forms, and when price moves in your favor, you begin calculating the profit. And when it moves against you, you imagine the recovery. Your brain's constantly waiting for the next piece of information, like, will the price break new high? Will it reverse? Will it trade your hit? Will it hit your next target? Will you finally recover the loss? And this uncertainty keeps your attention locked onto the screen, and sometimes the anticipation becomes more powerful than the trade itself. Think about a slot machine, right? You ever gone to a casino? Think about those slot machines. You pull the lever, you don't know what's going to happen, and most of the time you lose. Sometimes you win. And occasionally, you win enough to convince yourself that the next attempt could change everything. The reward is unpredictable. And psychologists call this a variable reward. You don't receive the same outcome every time. And because the outcome is uncertain, your brain keeps coming back. Trading can create a very similar loop. You enter, you wait, you lose. Sometimes you win and then you try again, right? Maybe you win again. But unlike a slot machine, trading gives you something even more dangerous, the illusion of control. You can change the entry, you can move the stop, you can increase your size, you can add indicators, switch time frames, and you convince yourself that the next trade is different. And that makes it so easy to believe that you are not changing or chasing a reward. You're simply analyzing the market. But sometimes analysis is only the story you tell yourself while your brain searches for another hit of anticipation. This dopamine cycle often begins before you even enter. You see price approaching your level, your focus sharpens, you lean closer to the screen, and you imagine the perfect entry. And you imagine catching the entire move. And you also imagine posting the profits in your social media. You imagine recovers yesterday's loss. And at that very moment, you're no longer simply observing the charts. You're actually emotionally invested in the outcome that hasn't happened yet. And that imagined future creates excitement, right? And once the brain becomes attached to the reward, waiting becomes so painful. So what happens? You begin entering early. You ignore missing confirmation. You convince yourself that the setup is so close enough until you take it. Not because the opportunity improved, but because your brain wants the uncertainty resolved. It wants the trade, it wants the result, it wants the next emotional event. And this is why patience is so difficult in trading. And waiting doesn't feel like doing nothing. Waiting feels like denying your brain a reward it believes that is so close. So you think losing money would make somebody trade less, right? Sometimes it does. But often, this loss creates an even stronger urge to continue. Because the trader is no longer searching only for profit, he is searching for relief. A loss creates emotional discomfort. The account is red, confidence drops, the mind starts replaying the mistake, and then a new opportunity appears, then suddenly the next trade feels like a solution. And you tell yourself, this one wins. If this one wins, I feel so much better. If I recover the loss, I could finally stop. This trade can fix the day. So you see, this is the beginning of revenge trading. The trader is not entering because the stop is exceptional. He is entering because he wants to change the way he feels. And when emotional relief becomes the reward, the trader can justify almost anything. Larger size, lower quality setups, more trades, moving the stop, ignoring the daily loss limit, and the trade becomes less about probability and more about emotional escape. You see, losses are not the only trigger. Winning can also create the same problem. So, look, you take a clean trade, it works perfectly, it hits your target, you feel focused, you feel confident, and almost impossible, almost unstoppable, almost impossible that you're going to lose the next trade, right? And then the mind says, take another one, do it. You begin to believe that you are seeing the market so clearly, so you increase your size, you loosen your standards, and you mistake a favorable outcome for proof that your judgment is perfect. And this is how a good trading day can collapse. The trader is no longer protecting the win. He is chasing the feeling created by the win. The first trade followed the plan, right? The second trade was slightly weaker, and the third trade had no real setup at all. But by then, the brain is not asking whether the trade is necessary. It is asking whether the reward can happen again. The market is always willing to provide another uncertain outcome. That's just the way it is. And you know what? One of the least discussed emotion in trading is boredom. You see, most traders prepare for fear, right? They prepare for greed, they prepare for losing, but they don't prepare for the long periods when nothing happens. And you're not supposed to do anything. There's no clean setup, there's no volatility, there's no reason to enter. And this should be easy, doing nothing. But for many traders, doing nothing feels so unbearable. So they look at the smaller time frames. Maybe they'll see another opportunity faster. They begin drawing new levels. They search for setups that were not visible 10 minutes ago. And they tell themselves that they are just being flexible. They're just being, quote unquote, one with the market, being adaptable. But in reality, it's their brain simply searching for stimulation. And trading can train you to expect constant movement. Every single candle becomes potential. Every fluctuations become an opportunity. And eventually, a quiet market begins to feel wrong. And the trader creates action because stillness feels so uncomfortable. But the market does not pay you for being entertained, right? It pays you for making high quality decisions. And sometimes the most professional decision you can make is to sit in front of the chart and do absolutely nothing. You see, the cycle usually looks like this. You feel bored, frustrated, or excited, right? You search for a trade, you enter, anticipation rises, the outcome arrives, you feel pleasure, pain, or relief. Then the emotional intensity fades, and soon you begin searching again. The trader thinks that he is searching for another opportunity, but he may be actually be searching for another emotional peak. And this is why some traders feel so restless after closing a winning trade. They made money. They should feel satisfied, right? But within minutes, they want to trade again. The profit wasn't enough because the real reward was not the money. It was the excitement. It was the uncertainty, the feeling of being inside the move. And once you begin trading for stimulation, risk management becomes so much harder because risk management is intentionally boring. Like small size is boring. Like waiting is boring. Taking only one setup is boring. And closing the platform after reaching your limit is absolutely boring. But boring is often exactly what profitable trading looks like. And you got to get used to that. You see, the answer is not to eliminate dopamine. It's inside of your brain. Like you can't remove your brain's reward system. The goal here is to stop allowing the reward system to control your execution. The first step is recognizing the difference an opportunity and an urge. An opportunity comes from your plan, the plan that you wrote before you went to the market, right? An urge comes from your emotional state. And before entering, go ask yourself, was I waiting for this setup before it appeared? Or did I just start looking for a reason to enter the trade because I wanted action? And that question raises awareness. And the second step is delaying the click. Delaying it. Don't even touch your mouse. And when you feel an urge to enter, what do? Wait. You just gotta wait. Even 30 seconds can help. Like read your checklist, confirm your setup, check your risk, and ask whether you still take the trade if the previous trade had never happened. If the trade setup can't survive 30 minutes of a second check of examination, it was probably not a strong setup, right? It's not even an A+ setup. And the third step is reducing access. You set up a maximum number of trades, use a daily loss limit, and remove one-click trading if it makes impulsive entries too easy. Like close the platform after your session ends. And don't depend on willpower because the temptation remains directly in front of you. Like as long as you have the computer in front of you, you have the charts in front of you, like that temptation is there. You should make your environment to induce easier behavior, good trading habits, and the emotional behavior becomes harder. You see, most traders only reward themselves when they make money. That creates a problem. You can follow your plan perfectly to a T and still lose. You can break every rule and still win. And if profit is the only reward, your brain may reinforce terrible behavior. Instead, begin rewarding the process. Like, did you wait for your setup? Did you respect your stop? Did you stop trading after reaching your limit? And did you avoid an impulsive trade? And you know what? You got to call those wins. They may not create the same emotional rush as the large green trade, but over time, they build something more valuable. That's consistency. And the goal is to teach your brain that following the plan is rewarding. And even when the result is negative, like in your P&L, because one trade tells you almost nothing, but disciplined behavior repeated across hundreds of trades, day in and day out, that can change everything in the long run. So what's the conclusion here? The market is one of the most powerful environments for trading, for triggering the human reward system, right? Our dopamine. Every candle offers uncertainty, and every entry offers possibility, and every win promises another win, and every loss promises a chance at recovery. And if you're not being careful, like you stop trading to execute an edge that you develop for yourself. You start trading to feel something, the excitement, the relief, hope, control. You see, the problem is not that you enjoy trading. The problem begins when the need for stimulation becomes stronger than the need for discipline. Profitable trading often feels less exciting than impulsive trading, and because it's slower, it's more controlled, it's more repetitive, it's sometimes painfully boring. But that boredom is not a sign that you are missing opportunities, and it may be a sign that you're finally behaving like a professional trader. Like you don't need to react to every single candle, right? Like you don't need to recover every loss today. Like you don't need to trade another another position simply because the market is still open. And sometimes the urge to trade is not more information, it's only dopamine. It's just your dopamine asking for another chance, and your job is not to obey it. Your job is to recognize it. And once you recognize it, go pause, take a break, and return to the plan. Return to your trading plan, because the market rewards patience, but your brain rewards action, and learning to choose between them may be one of the most important skills you develop. All right, master your mind, master the market. This is NQ State of Mind. If you like this video, make sure you subscribe. All right, we'll see you later.